Today, we're going to pull back the curtain on the market's most famous indicator, the VIX. But trust me, this is not the story you see on the news. We're about to dive into its secret life and how it might just be shaping the very markets it's supposed to be measuring. You've seen this headline a million times, right? The second the markets get a little choppy, bam, the VIX is all over your screen. It's pitched as the ultimate gauge of Wall Street's anxiety. It's the undisputed star of the show when everything gets scary. But here's a thought, and it's a big one. What if the VIX isn't just a passive thermometer, telling us how hot things are getting? What if it's actually pouring gasoline on the fire itself? To even begin to understand that, we have to tear down its public persona. So let's take a closer look at what everyone thinks they know about the so-called fear index. Okay, this slide gets right to the heart of the whole misunderstanding. The media absolutely loves the simple, punchy, emotional label, fear. But here's the thing. The VIX isn't measuring an emotion. It's a cold, hard, mathematical forecast. It uses options prices to guess how much the S&P 500 is going to swing over the next 30 days. It's all about math, not mood. And this brings us to a super important idea. You gotta think of the VIX as a map of reality, but it is not reality itself. And just like any map, it can have some pretty serious blind spots and distortions. The VIX basically gets its genetic code from the legendary Black-Scholes options pricing model. This is the mathematical engine that powers our math. Now, it's brilliant, no doubt, but it was built on some very specific and, frankly, very flawed assumptions about how the world actually works. And this is the root of the problem right here. The VIX's DNA basically assumes that market returns fit neatly into a perfect little bell curve. That makes catastrophic events, the black swans, seem like they're practically impossible. It assumes markets are always rational and that volatility is stable. But as anyone who lived through 2008 or 2020 can tell you, the real world just doesn't follow those rules, not even close. So what happens when everybody starts using a flawed map to find their way? Well, this is where things get really interesting. This is where the VIX stops being a simple indicator and becomes an active force in the market. This is where the map starts redrawing the territory itself. This feedback loop is absolutely crucial to understand. It all starts with a little bit of genuine uncertainty, maybe some bad news, and that pushes the VIX up. But then, this massive army of automated trading algorithms, all programmed to sell when volatility spikes, they kick into gear. All that selling creates more panic, which, you guessed it, forces the VIX even higher. That triggers even more selling, and the whole thing just feeds on itself. It's a vicious cycle where the indicator of fear actually creates more fear. And believe it or not, this isn't just some abstract market theory. A spiking VIX is almost like a proxy for thousands of human amygdalas. That's the primitive fear center in our brains, all firing off at the exact same time. Studies in neuroeconomics actually show that the fear of financial loss triggers the same fight-or-flight response as, say, seeing a predator. So in a way, the VIX is putting a number on a biological stampede. And if you want stone-cold proof of how dangerous this feedback loop can be, we need to talk about one specific day. A day that became infamous in modern market history, Volmageddon. On that single day, the most popular product for betting against volatility, a product known as XIV, lost 96% of its value. Just let that sink in for a second. Almost completely wiped out. In just a few hours. This wasn't some slow, drawn-out crash. This was that feedback loop on hyperspeed. It was a self-fulfilling prophecy of collapse, and it was driven by the very products designed to track the VIX. So that brings us to today. In an era of high-frequency trading, AI running wild, and totally new market structures, where does that leave the VIX? Is it still the king of volatility? This chart shows a massive change in the game. See, the classic VIX is calculated using options that have about a month until they expire. But since 2022, the market has been completely flooded with something called 0 days to expiry options, or 0 DTE. This is a gigantic, lightning-fast source of volatility that the old-school VIX might not be fully capturing. And hey, just look at the world of crypto. They've tried to create their own VIX, like the BVOL for Bitcoin. But the differences here are huge. You've got no central bank to step in during a crisis, the market is open 24/7, and it's just a way wilder place. It really goes to show you that context is everything. You can't just copy and paste a fear index and expect it to work the same way.
So, after going through all of this, what's the real lesson? What's the strategic insight you should walk away with from the VIX's secret life?
Here it is. This is the single most important idea to get. You have to stop thinking of the VIX as a simple thermometer. It has become a thermostat. Its own movements now influence and actually help control the behavior of the entire system, turning the heat up or down in a way its creators probably never, ever intended. Making sense of these complicated, interconnected systems is exactly what we do here. If you want to keep connecting the dots between macro, AI, and technology, you should definitely follow our channel, Macro Economy IA. Just so you know, all the research for this analysis was compiled in early 2024. This world moves incredibly fast, so make sure you're subscribed so you don't miss our latest explainers. We'll help you stay ahead of the curve. And finally, the important stuff. Please remember, this is all for informational and educational purposes only. It does not constitute investment advice in any way, shape, or form. And as Volmageddon showed us all too clearly, past performance is absolutely not a guarantee of future results. Thanks for tuning in.